What's up?
Cool, man. Well, it's good being here with you, Nate.
Thanks for having me, Vincent.
Yeah.
This is great.
Yeah, so welcome to Market Movers. This is a new idea fueled by Visual Content Agency. I'm your host, Vincent Apodaca. I'm the creative director here at Visual Content Agency. We're happy to have you on the podcast today. Just want to know a little bit more about you and what you do in your role in the financial sector.
Sure. Yeah. So again, my name's Nate Miles. I'm an investment advisor with Cooper Capital Group. We're a boutique investment management firm in Encinitas. We help by managing our clients' investment portfolios, typically in the form of an IRA or trust account, things of that nature. My role within the firm is pretty multifaceted. A lot of attention is focused on client relationship management, a ton of market research and analysis, and really stepping into a lot more aggressive business development, marketing, really trying to grow the business. So a lot of attention is focused on networking, meeting individuals, doing a little bit of digital marketing myself, and that kind of thing. So that's pretty much a broad summarization of what I do, but a lot of different hats for sure.
Nice. So what inspired you to basically pivot into the financial sector? And you told me you were in the marketing field at one point. So can you kind of tell me about how that transitioned for you?
Basically, I've always kind of had an affinity for money since I was a kid.
Who doesn't?
Who doesn't, right? I found this picture printed out of me when I was like 6 or 7 recently that my mom was storing. And it was this picture of me as a kid holding a $20 bill. And I had the most stoked look on my face looking at this picture. And it was just something that I've always been really interested in and passionate about, and really kind of wanted to understand at a deeper level, more than just like surface level. Just wanted to understand what money was, how it worked. And once I learned about tools to use money to make more money, I got really excited, right? I remember in high school specifically, our economics teacher, Mr. Romero, showed us a movie, Wall Street, classic movie. And I think most people in the class were sleeping through it, but I was hooked, right? So after that movie, I remember going up to my teacher, Mr. Romero, and said, I want to do that. I want to start investing. How do I make this happen? I didn't have any sort of people in my life to kind of show me what this world looked like. And he told
a lot of people really don't.
Right. Yeah, exactly.
Yeah. It's always nice to have that inspiration and that mentor.
That's right. So it was really cool to just, go on a limb and just ask him where to start. And he told me, go to Charles Schwab, set up an account. They'll take care of you. They're great over there. So that's some of my earliest memories of this journey. After that, dove right in. I remember reading Rich Dad, Poor Dad. I remember reading The Intelligent Investor, these kind of holy grail financial books, just trying to absorb as much information as I could. So this is like a high school. I go to college and my career takes a different direction, because I was just entrepreneurial. I really enjoyed business for what business was. And I kind of was gravitating more toward marketing side of things. I had marketing professors that were also telling me that they thought I could do really well in that field. So
naturally you felt creative?
I think I felt both, but I think I had professors kind of pouring into the marketing side. So it gave me that confidence, just okay, I guess this is a direction I can go toward. And in the process, I was still reading and researching a ton of financial information, learning about stocks on the side, kind of as a hobby. It was always just this thing I was doing on the side, trying to learn from practice and experience. And then it wasn't until probably fairly recently that I decided, long story short, I wanted a career change. And it was time to kind of dip back into that passion I had since I was a kid, and especially in high school, wanted to see if I would be able to make a career out of what had been such a passionate hobby for so long.
Did you go to school for it? Did you have to go to any classes, or what was the whole pivot?
So the pivot happened much faster than I expected. I wasn't entirely sure what the roadmap would be for me to do that pivot, to completely change my career path. But one thing I did know was that I was hungry and ambitious, and that I would make it happen, whatever it took. So for me, it really came down to reaching out to Clinton Cooper, who is a local investment advisor. He owns the firm I work for now. I reached out to him and just said, hey, I'm trying to get involved in this industry. I just wanted a quick phone call to see if you could give me any advice. I was kind of coming to him with, could you just give me advice, show me a direction? What does it take for me to do this and do it well? That turned into him giving me some side projects. and testing me out. And I think he saw the hunger in me. And before you know it, they actually offered me a job. So it happened way faster than I anticipated. I'm extremely thankful for Clinton Cooper and the firm. And they kind of just took me under their wing and taught me everything that they know and are still teaching me every day. The main process was learning I had to study to get my Series 65 license to become a registered investment advisor. That was the number one main hurdle that I had to do. So the first several months being at this job was me studying for that exam while doing other, tasks at the firm, but really focused on passing that. And I had my test to take a couple of weeks before my wedding, which was in Hawaii. And I was stressed out of my mind, so I'm planning this wedding, this destination wedding in Hawaii, while also studying for this huge exam. Also, it had been years since I'd taken a test at all, since college, right? So I'm having to relearn how to study, what those skills look like. Stressed out of my mind, but passed the test right before my wedding, had the wedding. That was a success too. So really appreciative for how this last year played out, but it's been quite a ride, no doubt.
I really like the entrepreneurial mindset you had to reach out to that person and really just like get into their world and find that mentorship or find that person that was willing to like invest into you, really.
Sure.
I mean, that's like marketing all in itself, right? It's like cold calling, trying to find that right person that's willing to take that bet on you. Did you do that more than once? Are they the only person?
Yeah, so a lot of that, I mean, it's a great observation. A lot of that comes more naturally to me because for the time period that I was working in marketing, I was doing something very similar to what you do. I was running my own small marketing firm, and I was used to reaching out to business owners constantly, right? So I had already kind of broke through that barrier. I'm not afraid of regret. I can handle rejection, just pulls right off the shoulders, nothing to me. So some of that's natural just from having that entrepreneurial upbringing and background anyway. I did not reach out to any other financial advisors. I reached out to Clinton as somebody that I kind of respected from afar already. And he was the person that I wanted to talk to. And he answered right away, and things took off from there to a point where I didn't need to reach out to anybody else. So luck, or, I am a person of faith. So, I kind of attributed that to God, certain moments like that, those bigger universe coincidences, whatever you want to call it. It's one of those things where the stars align and it works out. And now my job is to execute, right? And work hard and make sure I'm performing to show appreciation.
Yeah. So Nate, I mean, this is great. I love your story, everything that you just said. For the audience, we're trying to talk about marketing and finance. And so one thing that I'm interested in is, what are the economic trends and marketing insights for 2024?
Great question. So next year, 2024, kind of comes down to two major scenarios that are being heavily debated right now. So you have the scenario one, where we get a soft landing, where we avoid a recession, unemployment is low, and the Fed successfully tames inflation. Scenario two is we have a hard landing. We do have a recession, unemployment is high, and the risks associated with that are available and on the table. I think it's important to highlight, before we get into anything, really highlight the Federal Reserve and what they've been doing the past couple of years. The Fed, our central bank, they have a dual mandate to maintain stability in unemployment and inflation as well. The Fed uses interest rates as a form of monetary policy to dictate the pace of the economy as a whole. So when the economy gets overheated, which is actually what we saw in 2021 and 2022, where inflation got as high as 9%, this was due to a lot of massive fiscal stimulus being pumped into the economy following the pandemic. So when the economy gets overheated like that, the Fed will actually raise interest rates in an attempt to slow the economy and to cool inflation and bring inflation down. Likewise, when the economy is slow and stagnant, the Fed will cut interest rates. And so this is their attempt to encourage more economic activity. Interest rates are just the cost of borrowing money. Yeah. Now, the reason I bring this up is because historically, when the Fed performs interest rate hike campaigns like we've seen, they have a tendency to overdo it. So if you were to look at a historical chart of the Fed funds rate, you'll see a pattern emerge where interest rates will probably be at a stable level for some time, and then suddenly it'll start to pop up. This is the interest rate hike, and it'll peak, and then it'll plateau here. So if you're looking at these charts, depending on the chart you're looking at that plateau point, you'll often see a gray shaded bar. That gray shaded bar is a recession that happened in history. So we're repeating this pattern. This isn't a guarantee that this is going to happen, but it's something that I pay a lot of attention to. So we have had an extremely aggressive rate hike campaign over the last couple of years. Inflation was at 9%. Now it's at 3.2%. The Fed has a goal to get that to 2%. So I do want to say, like, I know I'm using the word recession quite a bit. That could be kind of scary to people at first, especially in the media. People use the word recession, and it
felt like they've been saying that word for a long time now.
It's been,
I feel like they've actually said that we were in a recession.
That's right. So there's been a lot of debate about, are we in a recession now? Is it a rolling recession? Has it happened yet? And a lot of times that word is kind of thrown out there with a lot of negativity or emotional weight, I would say. And I'm sympathetic to that, because in a recession, there is economic pain, specifically in the form of unemployment or maybe bankruptcies. My family was impacted by the 2008 recession. I'm sure you were in some way. And the reason I want to highlight this, though, is just to make sure people understand that recession is also, even though there are some hard parts about it, for sure, it's also a healthy and natural part of the economic cycle.
That's true.
So the economic cycle moves like an S curve. You go through a period of expansion and then peak, and then contraction or recession, and then trough, and then expansion again. And so this S curve continues throughout history. A lot of economists say that a recession is supposed to happen once every 7 years or so. It's been 15 years since 2008.
But 2008, I feel like, was like a hyper recession. Like, it was really big.
Yeah, and I'm not
Like
indicating
the
that it's going to
Great
be
Recession.
anything like
It
that.
doesn't need to be that big.
It doesn't need to be that big
Yeah.
at all. But there is enough indicators to highlight that maybe we might get an economic downturn. So that dictates the way we kind of position things for next year. So from like a stock market perspective, for example, there's a couple forecasts out there. Bank of America, for example, and JP Morgan, they came out with their stock market forecast for 2024. Very different results. Bank of America sees the S&P 500 finishing 2024 at the 5,000 level. It's at about 4560 today. So that would be around an 8 or 9% gain from where we are today. JP Morgan sees the S&P 500 finishing at 4,200. That's the opposite. That's about an 8%, 9% downturn from where we are. So that's kind of the risk range that I'm looking at and I'm paying attention to. And it's important just to know about what the macroeconomic picture looks like when making any sort of decisions today. And this is true, I think, from a financial advisor standpoint, an investor standpoint, but even in marketing as well, paying attention to what the trends are going to be in terms of maybe consumer behavior or company behavior, or what people are doing in terms of their financial situation.
So how does marketing influence that? You're saying consumer behavior. How are these analytics, or how are these things documented or tracked within your company?
I could tell you that the U.S. consumer has been extremely resilient this year. In a large way, they have contributed to holding off a major recession this year by their resilient spending. So even this past holiday that we had, Black Friday and Cyber Monday, we set records for e-commerce sales. Now, I would highlight that buy now, pay later options were up 47% than last year. So for me, that's a clue into, okay, maybe cash isn't as available. Consumer debt is up very high to about $17 trillion right now. So consumer debt is rising while consumer excess savings are also depleting at the same time. So if you were to ask me, I would guess that maybe this holiday season is kind of a last hurrah of a rally from this resilient consumer. And as we see unemployment rising right now, it rose 0.5 percentage point last month. And we could see this rate of change maybe continuing. I wouldn't be surprised if consumers in 2024 really start to tighten their budgets again. Now, from a marketing standpoint, I think it's important to be aware of that dynamic, really understand your target audience, And it's really up to you what you want to do with that information. Maybe that is becoming more and more focused on niche target. Maybe it's focusing on more testing on what kind of advertisements are really bringing the best return on investment.
So I feel like larger companies have the benefit, and they have the funds, and they have to make the right decision based on the market. They have the financial analysts within their corporations. They have people like that telling them where to invest and how to do it properly. But people like us, small businesses who barely even know like who our audience is and are putting money into maybe organic marketing, how are we supposed to combat that?
I think there's still great opportunity from an organic marketing standpoint.
Yeah.
Specifically content marketing. You could do a lot with a good piece of content marketing. It's relatively inexpensive. You can do it organically, or you could do paid, of course. But if your content is really good, I think you have a chance to stand out. And a lot of times companies shoot themselves in the foot because they actually don't invest in high quality content marketing. They might be stuck in the old ways, doing things the old way that they used to, and not understanding the new target audience that is actually going to respond to a more tailored message.
Yeah.
So in terms of like content marketing, I kind of have a thing where I call it the 3 I's of marketing. You probably have your own rules that you go
Like
by.
content pillars.
Yeah, exactly. Yeah. And the 3 I's stand for inform, inspire, and invite. So I think every piece of marketing you create should either inform the audience of something valuable, inspire them. You want to inspire them to act. You want to inspire them and show them what your product or service can do for them. Show them the life that they can have if they, just spend a little bit on your product or service. Storytelling is helpful for that, right? And I think inviting is another thing too. Do you want to invite people in to what you're doing? Invite people in by having them sign up for a newsletter or a subscription, come to an event that you're hosting, whatever the case is. But I think if you do those 3 things well, you have a better chance of succeeding with your marketing strategy, no matter what the economic outlook is going to be. Because even as we're seeing this year with how strong the U.S. consumer has been, I think the U.S. consumer is going to maintain resilience. Things are just going to change. We're going to have to pay attention to different trends and what it's going to look like. I can't tell you obviously exactly what that's going to be in 2024, but from my broad picture standpoint, that's kind of what I'm preparing for.
You bring up a great point there, because with organic content marketing, if you actually create that core following beforehand, before any type of economic downturn, you have that community. You have that solid community within your newsletter, within your social media following. However you're like opting people in, like you said, invite them in, that core following is always going to have your back because they're going to love your product no matter what.
That's right. And a big part of that is going to be building brand loyalty, right? Yeah. And I'm curious to hear, maybe we could just share ideas, but what are some ways that you kind of think are the best ways to build that brand loyalty with consumers?
I mean, influencers, you create UGC type content. You want to create some type of campaign that has a specific hashtag where you can track. Those macro and nano influencers now are very important to help create that brand loyalty within whatever you're trying to sell, So I think that brands need to create campaigns that are more storytelling driven because it's authentic. Authenticity sells. And that's part of the organic mindset.
I see that. I know. I think pretty much every generation now, we're so digitally sophisticated now. I think we have a craving for authenticity. And we can tell when somebody's trying to sell us on something or something seems off, right? If a brand is trying to act a certain way or sound a certain way, but that's not who they are, it's an instant turn off. But if you're able to present yourself authentically, like for me as an advisor, I'm not coming here saying like I'm Warren Buffett and if you work with me, I'm going to make you billions of dollars, right? I'm young in the game. I'm working my ass off. I'm very passionate, and there's things that I can provide insight toward, but I'm always going to present myself as an authentic person and not try to dupe anyone in any sort of way. And I think clients and individuals respect that. They just want to know that they can trust the person they're talking to.
I agree. And I think too, like when they actually have a face to the name and the brand, like you're coming in, I also think like age and timing are very important, because like maybe when we were 20, they didn't trust us, but maybe like when we're older and we're not like as successful as like Warren Buffett, maybe they still don't trust us then. So we're like at that perfect point to really like invest into that like mindset and really show that hunger. And I think people really see that authenticity that way.
That's awesome. Yeah. And that I've been so excited to kind of do this and kind of have, build a friendship with you as well. Cause it's really cool too, when you talk about where we're heading in the future, I've become more and more focused with paying attention to who I'm surrounding myself with now. Same. And who I do business with, and making sure that my energy and my time and my resources are going towards something that is inspiring to me as well. Like I'm completely inspired by what you're doing, and I've been able to see you grow through time in 3 years and come back and check out your LinkedIn and look at what Vincent's doing. And I'm always so stoked to see it. And so I'm excited too to like be able to work with you and see where we end up 10 years, 20 years, 30 years from now. That's actually, it does bring me to this point too that I like to highlight. A lot of people in our age think that investing is all about how much money they have to invest. I really try to reframe that perspective, because it's not all about how much you have to invest. It's a lot of times it's how much time do you have. So for a lot of people our age or our demographic, time, I think, is actually our greatest asset. Like with the power of compound earnings, an investment portfolio, if you're conservative or if you are growth oriented, whatever, as long as you're consistently investing throughout time, 10 years, 20 years, 30 years, 40 years, 50 years from now, with compound interest, you can see your account grow exponentially. But that shows that the best time to start is now. Like there's no holding off. You're every day that you let go by without paying attention to your future, you're just letting another dollar go to waste.
Totally agree with that. I think time is definitely the most valuable asset. I mean, that's why I chose to be an entrepreneur, and I appreciate your kind words. And it's really hard because it was like a huge investment in time,
right,
initially, all that sweat equity. Maybe I didn't spend all that money to get where I'm at, but I spent a lot of time. I spent a lot of hours, and I've been learning this forever. And I really appreciate those kind words. So thanks for saying that, man. Yeah.
And I think time is just kind of cap that point. Time, you hear people talk about time in a lot of negative ways too. Where did all the time go? A lot of time spent in nostalgia, thinking about, oh, things were so much better back then. I'm so much older now. Oh, I wasted my 20s. I wasted my teens, whatever it is. People fall prey and subject to time as this overlord because it's unstoppable. Like the most unstoppable force in the universe that we know. It's can't do anything about it until one of us invents a time machine. This is what it is. So you can choose to kind of fall victim to time and live with a bunch of regrets, or I think you can use time and harness the power of time for your advantage. And you can do this financially too. And that's where investing comes in as well. You could say, okay, I get it. Time is nonstop, but if I'm wise today and I make certain decisions and I save or I pay attention to what I'm doing with my money right now, I can actually benefit greatly from time. And then in 10 years, 20 years, we can see how kind of partnering with time, you can really set yourself up.
I kind of want to highlight what you do for the company, because I feel like you brought up some good points about, LinkedIn, and then also like in the beginning you had mentioned stuff about Bank of America and Wells Fargo sending out like just PDF market insights. I mean, that's very valuable information, and that's a form of marketing, right? It's like you put together this market update for your community, and you want to be right, and you put a lot of time into that. So how do you do that for your company, and how do you see that reflect as far as just like maybe not necessarily ROI, but just like brand awareness? Are you getting any type of, conversation within your industry when you put that type of stuff out? Do you see it being of value?
Completely. Having a content marketing background, it's always been very natural for me to just create stuff. So that's probably been one of the bigger impacts I've had on the firm since joining, is just coming in and creating content for us to have. I created a CCG investment process PDF that just kind of consolidated our process, put it in, I would say, a well-designed PDF and made it easy to see. We have market insights that we send our clients through a email newsletter. I came in and said, okay, I'm going to start posting this on LinkedIn so that people actually see it other than just our current clients. My job now is focusing on getting CCG as much brand exposure as possible while remaining within the compliance rules and legalities that, kind of can hold financial advisors timid. But I think basically I try to focus on showcasing that we are paying attention every day. So I will give little recaps on LinkedIn. I'll post like, this is what the market did. And I keep things very broad. I don't do any sort of, you should buy this stock or sell this stock. That would be bad news for everybody.
And none of this is financial advice.
None of this. Great disclaimer. That's right. I'm glad you did that. None of this is financial advice. And, but I think it's good to just kind of what I said earlier, just painting the broader picture of what the economic outlook looks like so that people at least have awareness and some sort of idea and understanding of what's going on in the market, in the economy as a whole. And I think knowledge is power. So if you know what's happening, even if it seems like bad news, you can utilize that to your advantage if you act accordingly. So I just try to build brand trust that way by just showing this is what we're seeing. And I love having conversations with people, and that's where I'm able to get a little bit more into the details of what does your specific financial situation look like? How aggressive of an investor are you? How conservative are you? Are you closer to retirement? Are you further away from retirement? What are your goals? Do you want to buy a house? Are you good? You know what I mean? So things get really complicated, which is why you can't give these blanket do this with your investment portfolio statements.
Well, and I know when I invested with you, there was like a very deep dive of a discovery where you asked me those questions, and it really kind of made me think about my whole investment portfolio and perspective. Like, wow, this is pretty intense, Right. So it's like really good to ask questions and then show people that you actually have that knowledge.
Yeah, it's good to have those questions, and people think they know their risk tolerance, but often they don't until you really go through the work with them. You might think you're an aggressive investor and you're like, yeah, put me all in NVIDIA. And then NVIDIA's down 30% and, in a couple months, and then you're mad. It's like, well, that's kind of how this game works. Depending, the risk reward ratio is really important in investing. So it's important that the client, the individual knows who they are so that they're not surprised by any sort of volatility in their investment portfolio. And again, especially younger people who have long-term time horizons, you're usually able to stomach those market swings better. And there's time to kind of regain composure if the market ever does take a hit here and there. That's good.
So what are your final thoughts on the future of finance and marketing?
So I actually think there's a lot of room for improvement from a marketing standpoint in the financial sector. And what I mean by that is financial markets carry a ton of complex information, data points, numbers, digits, like it could be overwhelming for clients or individuals who maybe are interested in investing, but they don't fully believe that they understand it. Maybe they're intimidated by it. So I think that my plan, at least, is to utilize marketing tactics, content generation, well-designed information, and use that in a way to make complex financial information digestible and understandable. I think for a time, maybe people in the financial sector wanted there to be this gap, or maybe they wanted there to be an illusion of a gap of this, we know everything, you don't, so you need to work with us. That doesn't work in the information age. The information is out there, but there's
especially
still
with fintech.
Exactly. Yeah. So there's opportunities for anyone to learn this stuff. Of course, there's still a value to having an advisor as a personal advisor to work with you, because even if somebody knows a lot about the stock market, oftentimes they work in a different field. Maybe they're an attorney, or you're in real estate and or you have a family and you just simply don't have the time to dedicate, your every day to paying attention to all the ever evolving market, data and changes. So all that to say is I just think it's important right now to find out, how can I take this complex information and bring it together in a story so that people can understand what's happening. That's actually kind of what I tried to do earlier in this conversation when I went over the two scenarios for what 2024 is going to look like and what the Federal Reserve is doing and what that means for consumers. I tried to kind of create a through line. Hopefully it was understandable enough and not too complex, but there's all sorts of different data points you look at every day. But if you kind of can understand it and read the language, you can kind of give a good story for, what's actually happening and make it actionable for people.
Yeah. It's a great synopsis. It's a lot. It's a lot to take in, and every day it changes. So, wow, Nate, that was a great story, man. It's great to have you here.
Thank you for having me.
Thanks so much for being the first person here at Market Movers.
Yes.
This is Nate Miles with Cooper Capital. Good. If you want to just plug in your business or...
Again, Cooper Capital Group is the name of our firm. You can go to our website at coopercapgroup.com. You can shoot me an email at nmiles@coopercapgroup.com. You could call the office, 760-452-6114. Feel free to connect with me on LinkedIn at Nate Miles. You guys are smart. You know how to find people. You'll find me.